Welcome to the Whitwam Wealth Real Estate Podcast. I'm Scott Whitwam, and on today's episode, we're going to talk about investing in co-living.
Welcome to the Whitwam Wealth Real Estate Podcast with Scott Whitwam, your blueprint to financial abundance. Settle in as we explore the mindset and methods for wealth building through real estate.
Welcome back. I'm Scott Whitwam. I'm glad you joined me for today's episode of investing in co-living. If you missed last week's episode, I recommend that you go grab hold of it because we had a great time as we entered into this space of co-living. But before we get started today, because I have two incredible people who are operating in this space with me today in the studio, which is Brian and Gina Kingdeski, I am so glad that they're here. But I want to read from their bio just so that you can get up to speed with me. It says, Brian and Gina Kingdeski are experienced real estate professionals with over 30 years of combined experience, having completed over 3,000 transactions under their belt. They know the world of fix and flips, wholesaling, short-term rentals, and now co-living homes. They are passionate about helping other investors expand their portfolios, as well as using their work as a ministry to help others be their best self through coaching using Christ-centered mission. What an incredible mission statement to have, and what an incredible background in real estate investing. So glad to have you guys with me again today.
Yeah, thanks for having us.
Yeah, so I want to talk about co-living. We kind of got into it at the end of the last podcast, and it's really exciting. So why don't we start with you explaining what co-living is, in case somebody watching hasn't seen our previous podcast.
Sure. So co-living is actually three or more unrelated individuals living in a home together. Basically, co-living nowadays, what you're seeing, it's been around for years and years, but what you're seeing is individuals anywhere from 6 to 10 people living in a house with individual rooms, sharing a common area of the kitchen, bathrooms, laundry, and living area.
Okay, so I've asked this, previously when we talked about short-term rentals, but why don't we talk about some of the pros and cons? I mean, maybe there aren't any cons in co-living. Maybe this is the golden goose, but what are some of the pros and cons that you guys have found so far with co-living?
So we found there's an app called PadSplit, and they're basically a tech company. And so they're the ones that kind of put together the members and the hosts.
Okay.
So the people that own the home are the host, and then the tenants are the members. So there's a platform that's called padsplit.com. And so the pro with PadSplit is this app makes it really easy. So you think of PadSplit as like the Airbnb or VRBO of the vacation rental business. So they're putting people together. They take their fee. And what PadSplit does really, really well is they fill your rooms. So that's their main job, besides the communication, collecting money. When a member wants to fill out an application, they fill out an application. They do background checks and criminal checks and eviction checks, and so then it basically sends us a notification, an email, and a text, and say, "Hey, you have a booking request." So that
takes a lot of load off you guys.
It's huge. So, and they spend about $500 to $700 per room to fill.
Okay.
On our behalf to fill the room. So they do a really good job with that. And we want to talk about some of the the cons or more pros.
The pros too. It's the fact that when you're in the short-term rental space, so much of your success in the business is subjective to travelers coming in and your guest ratings. So with a co-living space using PadSplit model, we've really found that these people are very grateful and appreciative to be in your home. So they're not nitpicking if the towels aren't folded correctly or anything. So you really get a sense of gratitude and people that want to be there. And so that's really rewarding. And so that's a definite pro for us. Short-term rentals is nice during high season. You have super high income coming in, but come summers, you are flat as can be. So the co-living space really provides more of a steady income throughout the entire year. So definitely pro there. And the fact that with short-term rentals, you're constantly spending money on cleaners Cleaners cost a lot more for short-term rentals. Restocking, I'm not worried about toilet paper and coffee and everything that goes into getting a short-term rental house. You have a lot less expenses with the co-living space. So I would definitely say that that's a big pro.
Okay.
And we like this. We like, the whole Gina mentioned, like you have the traditional rentals back in the day.
Right.
If you were to cash flow $100, you're happy, or $200. So
Right. You're working on appreciation and hoping to make $100 a month. Yeah.
This model, we found that it's stabilized and we're not like stressing money wise with these homes. They'll make anywhere from $800 to $1,500 a month per home. Because if you're collecting, we have 8-bedroom homes. One of them's a 9-bedroom. You're getting $200 to $220 a week. You map that out,
Right.
and then we're responsible for the utilities, the Wi-Fi, water, sewer, trash. We have the homes cleaned twice a month, and so with that, they're cash flowing.
Right.
So that's a big benefit.
Now, I know it's a
obviously.
little bit newer space, so I've heard a lot of pros.
Yeah.
There's got to be some cons. What have
Yeah.
you guys run into that
Sure.
could be better?
I mean, one thing that, we are grateful for Pad Split to doing their background checks. So they're doing their background checks for any major convictions or anything, and evictions as well. We take it a little bit further, and I get on Maricopa County Superior Court and look myself to see if anything's fallen through the cracks. And there will be things that have fallen through the cracks.
Right.
They can be accused of something, and if they take a plea,
Right.
then it doesn't show up on Pad Split because they took a plea. So that's when we have to kind of step in and really decide if we're going to make that hard phone call with somebody and really ask them about the situation. And we've made a couple choices that have been really successful for us. But in terms of cons, you've got peanut butter and jelly issues. That would be something. When you're managing anywhere from 40 to 59 tenants, you can get those people. You can't help it. Out of a house of 8, you might have one that's a little on the struggling with some mental illnesses and stuff.
A little surly.
Yes. So you have to learn how to handle that.
Right.
And in terms of turnover, that's not too bad or anything, but that can be considered a con. You don't have the longevity that
Right.
you would in a traditional single family home rental.
Yeah, and like Atlanta's, they've been around forever.
Right.
Pad Split. So their length of stay is anywhere from 10 and a half months to a year and a half.
Okay.
Here, we're a little newer, so we're seeing, 6 months, 7 months, but I feel like it's getting
starting to
longer now.
stabilize, for sure.
Now,
Yeah.
Pad Split isn't the only person in this space. In fact, as you introduced me to some other players in this space, have you guys engaging those other ones, or are they still kind of something that you're not like JCE Living or?
No, we did, and we gave one of them a chance.
Okay.
One of our Gilbert homes, and after 3.5 weeks, I said, "Uncle." And
Okay.
we went back to Pad Split, and because Pad Split, the one thing they're good at, you're paying your fees obviously
Right.
to do that, but they fill rooms.
Yeah. Now, the difference is Pad Split is shorter term. So they do a weekly where
Yeah.
JCE does monthly.
Well, it's 31 days, and then it's week to week after
Oh,
that.
okay.
But with that, the length of stay is 6 to 7 months now.
Okay.
So it doesn't necessarily matter that
because you're getting the longevity
yeah.
with that anyways. And I'm sure that you're going to see other players pop up
For sure.
in this space, especially the more successful it is. And I think that when we were talking with the guy from Pad Split at your guys' seminar, they were they'd started in San Francisco, they'd gone to Atlanta, and they were doing a couple other major metropolitans, Phoenix being one of them. But I imagine as this starts to venture out, people are going to go, hey, maybe there's money here and we can do it different or better or whatever than Pad Split and see some other options. So there may be some changes. Is this the kind of thing, though, that somebody could do on their own?
I mean, people have been doing it for 20, 30 years. People rent out rooms and stuff like that all the time. So yes, you can. But it's the whole thing. If you can advertise and find the person,
and the background checks, and
like our son, Zach, he has a house that it's 4 bedrooms, and he's there by himself. He rents out the other 3 for $900 to $950 a month, and so it's actually covering all his bills.
All of his bills,
but people.
We should call it Zach Split.
Zach Split. There you go.
Yes.
There's we just started a new business, Zach Split.
Yeah.
Yeah.
But the other con is we went kind of we started, we liked it, and so we grew and we're growing and we're adding houses, but it really came down to not necessarily for us. We didn't want to go ahead and go gangbusters and build 100 houses and have 1,000 doors.
Right.
Like she's always got to pump the brakes on me. So, but which was good because it's kind of got Pad Split's growing and their name's getting out there. But it has to kind of go in this balance, because what we experienced is there was a while there that a bunch of homes hit the market. So we had 131 available doors.
Oh, yeah.
In this market. That's just for Pad Split.
Right.
And so, like I said, they do a good job filling rooms. But what happened was everybody had some vacancies, and so they're dropping prices. So our weekly rate, which was $220 to $230 to start, now is $200 to $210,
right? Because
of that, right? So we were freaking out for a minute there, and then I think now they're down to 71 because there's too many growing too fast.
It just got flooded.
And so now that's kind of chilled down. We had, 8 or 9 vacancies during that little freak out period.
Yeah.
And now we're full. And
there's probably a lot of doors that came available or rooms that came available because of the transition. People going out of the short-term rental, they already had the properties, and they're like, well, let's just convert these to Pad Split. So you had a whole, once that kind of, I think, settles down, you're going to be dealing with, people bringing on new properties. So it'll be a much slower pace. Probably into that market. In fact, let me ask you a question about that. Where do you guys find properties? Let's talk about bringing new properties into this space.
Okay. So, we basically took the same theory that we do with our flips as we did with our vacation rentals, as we do with our Pad Splits or buy and holds. So we basically, we'll find we have many different marketing channels. A lot of the time they come from different wholesalers. I'm sure get 80 to so homes a day,
mailbox, every week
and text messages and all that. So we'll find a deal, and we're okay with that investor making their money because we know it's hard to find deals.
Right.
So, we'll buy it. It's in really, really bad shape, as you know, and then we'll take it down with hard money. And then once we go through the process of rehabbing it and getting it ready to go, then we refinance out the hard money into a DSCR loan.
Right.
So that's how we've done ours. All of ours.
All of them.
And so that way, a little different the way we do it and the way other people are doing it, buying it off the MLS or retail.
Right.
Our homes, we have some equity day one. Yeah. So,
it probably leaves you a little bit more margin too when you turn it into the DSCR loan. And you've talked a little bit about, kind of the rents that you're getting per room. So how does that equate? How are those rents equating into profits then?
Yeah, so we're averaging anywhere from, like Brian said, $800 to about $1,500 a month after mortgages and utilities and everything. For us, that's good.
Right.
Rather than being in that short-term rental space when we're negative $5,000 a month for just one house. So we're happy to see that. And everything that we do, we're always thinking of the end in mind, that long-term equity play, as well as when we're building our houses, we're also thinking about, like I said, end in mind, how we could deconstruct them if we need to eventually sell them. But the nice thing right now is that Pad Split and co-living is really just bursting onto this market, and so there's a need, and there are people looking for active, fully booked Pad Splits available, and so
they're selling now in the off market.
Oh, okay. Well, let me ask you this, because in the short-term rental space, you guys were building experiences. You guys were building themed properties. Are you bringing any of that into co-living, or are you just trying to make them comfortable spaces and more traditional?
Well, we use the same materials as we do on our flips. So they're all nice. We mix it up, and there's different colors and stuff like that. And then the rooms are decorated. Pad Split has very minimum requirements, like no garbage disposals. You don't need a dishwasher, all this stuff. But we made them nice, like Gina said, beginning with the end in mind. We want ours to be nice assets that people,
Right.
we believe the nicer they are, they're going to hold their value. The members will take care of the home. So they're all, basically fully remodeled, and roofs and ACs and cabinets and granite and the whole.
You're just not
9
doing
yards.
themes with them. You're just
Not-
making them nice
Not
rental
necessarily.
properties.
No,
Okay.
no, we just make them nice and,
Yeah,
and
we really
comfortable for the people.
comfortable in the sense that we have a lot of homes where when you really start learning about co-living, they want minimal interaction between members. And what we've done is we feel different. Like, we want a sense of community. We want these people to feel like, hey, on Sunday nights we can go outside and barbecue and stuff. So we do provide, extra little essentials that, a lot of hosts in the beginning weren't.
Right.
I do believe a lot of people have followed suit on some of the things that we have done, but
Our kitchens are fully stocked.
yeah.
You don't have to. All you have to do is bring your backpacks, your bags, and you're moving in.
And you're moving
Mhm.
in.
And the thing is,
Right.
with Pat Split, no one ever comes by and sees the room before.
Right.
They basically are booking it without seeing it, and so they're taking their bags, they're moving in, and sometimes they have requests where they want to move in the next day.
Wow.
So that's the model,
Right.
and like Gina said, for the most part, people kind of stay to themselves, but they do hang out. Like, we go over there,
Yeah.
they are grilling and they are sitting at the
Cooking
bar. and-
pancakes. Remember
Yeah.
on Mother's Day, we walk
Yeah.
in and they're all making pancakes
Yeah.
together. We're
Well, let
like,
me
"That's
ask you
great."
this. You said they're out grilling and stuff. So let's just finish on this one, like the exterior features of the property as far as what kind of backyards do you have to have? Does it require a lot of space? What do you need for parking in a co-living environment? You got 8 rooms. Are you going to have 16 cars show up at the house?
Yeah.
What is kind of the exterior features require in a co-living space?
So the funny thing is about Pad Split, we find that only 30 to 40% of people have cars.
Mhm.
Okay.
So one of the things about the model, there's no HOAs. They have to be close to public transportation. So all of our homes kind of fit that model. So if we're interested in doing a home, we send it to Ellis. He does his research and he says, yeah, that's a good location. So, but then we also, thinking ahead, we try not to do grass. We do all desert landscaping. There's
Okay.
some bushes, and it's easy peasy. So
Yeah, I mean, Pad Split really says when we first found out about it and went and toured some houses before we converted our short-term rental, they don't want anything in the backyard, like nothing at all. And we're like, why? Why
Yeah.
wouldn't you have like a grill or something for someone to go sit out and and everything?
Right.
So
we put chairs and tables
Yeah,
and
we do,
grills, and,
yeah.
and we
Just-
make it nice.
we
So
make it like a
you
home.
guys make it a little nicer like a home, but it's
Yeah.
not a requirement
Correct.
in a co-living in
Correct.
Yeah.
space.
Yeah.
Yes.
And so you don't need big backyards. You don't
No.
need play areas.
But there's
and that kind of
there's
stuff.
people that we've helped. Ellis refers because we've spoke with Ellis, and Ellis kind of we have a different way of doing stuff, so he always refers people, and we've helped a lot of people transition from normal rentals to Pad Split and also vacation rentals to Pad Split. So we kind of have done it all for them. We have the crews come in there, we'll put get it furnished with additional beds and what the requirements are, and then we'll go active, and then we basically have handed it over and said,
Right.
it's yours.
Yeah.
Here's your baby.
Right. And your guys' business is full circle
co-living.
co-living
Yeah.
and fix and flip.
Mhm.
Yeah.
It's a tongue twister.
Yeah. And so, but if people are in the Phoenix area, you guys are available. I know you're also in the real estate
Yeah.
space, so you can help on the real estate brokerage side of things, just like I do.
Yeah.
And we'll make sure that information's on the screen so people can see it. But you could reach out to Brian and Gina, and we're out of time again, believe it or
Yeah.
not. I mean, you see
Yeah.
how quick it goes.
Yeah.
That's great.
I want to thank you guys for joining us on this episode of the Whitwam Wealth Real Estate Podcast. We've been talking about investing in co-living. If you've enjoyed this episode, we'd love to hear from you. We love your questions and your comments. Remember, you can always find the Whitwam Wealth Real Estate Podcast on Apple Podcasts, Spotify, and on YouTube, or wherever you like to listen to your podcast. Again, this is the Whitwam Wealth Real Estate Podcast. I'm Scott Whitwam, where we're wealth building through real estate.